Level 1, negative $12,436. That's your net worth. Not your bank balance, not your paycheck, your net worth. The number that includes the student loans you avoid looking at, the credit cards you consolidated twice, the car note that still has 38 payments left. You open the spreadsheet. Assets minus liabilities. The answer is red. You feel shame. But you also feel something else. Clarity. There's no illusion here, no false confidence, no decisions to make about where to allocate capital. You don't have capital, you have survival. At negative net worth, the game is simple. Earn, pay, repeat. The system treats you like risk, high interest, minimum payments, automated reminders. But psychologically, you feel sharp. You track every dollar. You cancel subscriptions instantly. You cook at home. You decline trips. You are focused because you have to be. Pain is a clean teacher. Level 2, $0. You paid it off. The last student loan payment clears. The final credit card balance reads $0.00. The car title arrives in the mail. You open the spreadsheet. Assets minus liabilities. 0. You expect fireworks. What you get is silence. But it's a powerful silence. For the first time since you were 18, no one owns your future income. No minimum payments. No interest clock ticking overnight. No letters in the mail with bold red fonts. 0 feels safe. Because nothing can be taken from you that isn't already yours. You don't owe. Psychologically, $0 feels like freedom, even though financially you are fragile. You have no debt. You also have no cushion. But the brain doesn't calculate risk like a spreadsheet. The brain calculates relief, and relief feels like safety. Level 3, $5,000 net worth. You build a small emergency fund. You move money into a savings account labeled buffer. Now you have something to lose, and that's when the anxiety returns. The car makes a strange noise. Instead of panic, you feel tension. Because now the threat isn't debt, it's depletion. At $0, you had nothing to protect. At $5,000, you have a shield. And every expense feels like someone chipping away at it. You hesitate before buying new shoes. You stare at a $120 dinner invitation like it's a strategic decision. Because growth is slow. 5,000 took months. You know how hard it was. Which makes spending harder than when you had nothing. At 0, spending meant still 0. Now spending means going backwards. Backward feels dangerous. Level 4, $15,000. You are stable by most standards. 3 to 6 months of expenses saved. No debt. A small investment account starting to grow. Objectively, you are safer than you've ever been. Subjectively, you feel exposed. Because now you have optionality. And optionality creates responsibility. Should you invest more aggressively? Should you keep cash? Should you buy a house? Should you start a business? At $0, the only question was survival. At $15,000, the questions multiply. And the more choices you have, the more mistakes you can make. Safety used to be simple. Now it's strategic. Level 5, $25,000. Friends start noticing. You're doing well. You must feel secure. You nod. But inside, something strange happens. You start fearing loss more than you value gain. You check your investment app daily. A 2% market drop erases $500. It feels personal. When you were broke, market drops were abstract news headlines. Now they are your money. You start considering pulling everything into cash, because cash doesn't fluctuate. Cash doesn't scare you. Cash feels like 0, but with padding. And that's when the reset temptation appears. The thought, What if I just stop pushing? What if I just stay here? Because growth requires exposure, and exposure feels like risk. Level 6, $50,000. This is the uncomfortable middle. You are undeniably ahead of average, but nowhere near wealthy. You feel stuck between identities. Too responsible to live recklessly, not rich enough to feel untouchable. This is where the net worth reset becomes seductive. You start fantasizing about a purchase that would bring you back down. A new car, a luxury vacation, a down payment slightly too big. Not because you need it, but because part of you misses the simplicity of zero. At zero, you didn't have to manage assets. You didn't have to think about allocation percentages. You didn't have to fear volatility. You just lived. Now you maintain, and maintenance is exhausting. Here's the shift nobody talks about. $0 feels safer than $50,000 because zero has no downside. 50,000 can fall. Zero cannot. When you're at zero, you are already at the floor. At $50,000, you are standing on a platform. And platforms can collapse. The higher you build, the more you can lose. Your nervous system doesn't care about probabilities. It cares about perceived threat. And loss feels like threat, even if you're still net positive. Level 7, $75,000. Something interesting happens. Your money begins to generate visible growth. A good year in the market adds $6,000 to $8,000 without extra effort. For the first time, gains outweigh contributions. This is when logic starts overpowering fear. You see the math working. You see compounding doing what people promised. And yet, the fear doesn't disappear. It evolves. Now you fear large corrections. Now you fear economic crashes. Now you read headlines about recessions differently, because you have something meaningful at stake. The irony? You are financially stronger than ever, but psychologically more sensitive because the number is big enough to hurt. Level 8, $100,000. You cross into 6 figures. It feels significant. Round, stable, respected. But internally, you feel one market cycle away from being humbled. You start thinking about diversification, tax efficiency, asset classes. You've moved from saver to allocator, and allocation requires confidence. Here's what most people don't admit. The hardest transition isn't from negative to zero. It's from zero to growth. Debt is heavy, but growth is fragile. At zero, you are climbing out. At $100,000, you are protecting. Protection is stressful because defense is constant. Why does this happen? Because the brain anchors to pain. When you were in debt, you promised yourself, if I can just get to zero, I'll be okay. Zero became the emotional finish line. Not wealth, not freedom, just relief. So when you surpass zero, your brain doesn't update the target. It still sees zero as safety. Anything above zero feels temporary, and anything below zero feels like failure. So you subconsciously protect zero, not growth. That's the net worth reset. The internal urge to return to the last place you felt certain, even if that place wasn't prosperous. Think about it. At $0, your identity was disciplined survivor. At $50,000, your identity must become strategic builder. That requires new skills, new emotional tolerance, new patience. Survival is reactive. Building is proactive. And proactive living feels unnatural if you've spent years reacting. The reset shows up in subtle ways. You delay investing because markets feel too high. You hold too much cash because volatility scares you. You over-diversify into safety. You consider large purchases that conveniently reduce your responsibility. You convince yourself you deserve it. Sometimes you do, but sometimes it's self-sabotage. Because growth demands psychological expansion, and expansion is uncomfortable. There's another reason zero feels safe: simplicity. Zero is simple math. Assets equals liabilities. Nothing to optimize, nothing to rebalance, nothing to hedge. At $100,000, complexity enters your life. Roth or traditional, index funds or individual stocks, real estate or equities, tax loss harvesting, emergency fund size. Money multiplies decisions, and decisions multiply stress. So the brain fantasizes about simplicity again, even if simplicity meant scarcity. Look at people who win the lottery. Many return to baseline within years. Why? Because their nervous system isn't calibrated for abundance. It's calibrated for familiarity. Familiarity feels safe, even when it's financially worse. The same principle applies on a smaller scale. If your nervous system is trained on zero, growth feels unstable. Not because it is, but because it's unfamiliar. The real shift happens when you redefine safety. Safety isn't zero. Safety is an absence of debt. Safety is adaptability. Safety is diversified income streams. Safety is skill leverage. Safety is the ability to recover from drawdowns. When you understand that, $50,000 stops feeling fragile, because you stop measuring safety by static numbers. You measure it by capacity, your ability to earn, your ability to adjust, your ability to wait. Here's the paradox. Zero feels emotionally safe. $50,000 is mathematically safer, but emotion overrides math. So if you don't consciously upgrade your identity, you will unconsciously sabotage progress. You'll reset. Not all the way to zero, but close enough to relieve the pressure. Some people reset through spending. Some reset through underinvesting. Some reset through career stagnation. Because growth demands tension, and tension demands resilience. Level 9, $150,000. You've survived volatility. You've seen corrections. You didn't panic sell. You didn't liquidate. You stayed. Now something changes. You realize losses are temporary if your structure is strong. You stop obsessing over daily fluctuations because your identity has expanded. You are no longer protecting zero. You are compounding capital. That's different. Protection is defensive. Compounding is strategic. Strategy feels calmer because it's long-term. At this stage, you finally see the illusion. Zero was relief, not security. It felt safe because nothing was in motion. But stillness isn't safety. It's stagnation. Real safety includes movement, but controlled movement, measured risk, intentional exposure. The net worth reset only disappears when you accept one truth. Growth will always feel less stable than survival, because survival is binary. Growth is variable. Binary feels certain. Variable feels risky. But variable is where leverage lives. If you want to move beyond $50,000 without craving the simplicity of zero, you must build psychological buffers alongside financial ones. Automate investing so decisions aren't emotional. Track long-term performance, not daily swings. Increase skills alongside assets. Remind yourself that volatility isn't failure. And most importantly, redefine your internal finish line. Zero was never the goal. It was the checkpoint. Right now, someone is staring at a negative net worth number. They believe zero will fix everything. And it will fix some things. It will remove pressure. It will remove interest. It will remove shame. But it won't build stability. Because stability requires growth. And growth requires emotional tolerance. If you're at $0, celebrate it. It's earned. But don't build your identity around relief. Build it around capacity. If you're at $50,000 and feel strangely anxious, you're not broken. You're expanding. and expansion feels unstable before it feels powerful. The net worth reset is a psychological reflex, not a financial strategy. Zero feels safe because it's familiar. $50,000 feels fragile because it's new. But new is where leverage begins, and leverage is where freedom compounds. You don't need to reset. You need to recalibrate. Because the goal was never zero. The goal was strength. And strength isn't the absence of motion, it's the ability to withstand it.